Hello and welcome to $3 TV. I am Ruchi Sharma. Solana-based corporate treasuries surged past $4 billion as companies have continued to accumulate the cryptocurrency according to new data. Data from the reserve tracker Strategic Solana Reserve showed on Tuesday that Solana treasuries hit 17.11 million tokens worth $4.03 billion at current prices. The reserve accounted for almost 3% of Solana's circulating supply of more than 600 million tokens. The largest participant was Forward Industries, which held more than 6.8 million SOL worth $1.61 billion. Other firms such as Sharps Technology, DeFi Development Corporation, and Upexi each held about 2 million SOL, with individual allocations exceeding $400 million. Ethereum treasury company SharpLink Gaming shared today that it bought back 1 million shares of its own stock at an average price of $16.67 as part of its ongoing $1.5 billion buyback program. The Minneapolis-based firm has now bought back around 1.93 million shares, spending nearly $32 million since the initiative was approved in August, according to the release. SharpLink said its treasury has expanded to 838,152 Ether, valued at approximately $3.7 billion based on current prices. SharpLink is the second largest Ethereum treasury among publicly traded firms, behind Bitmine Immersion Technologies, which hold more than 2.1 million Ether, valued at about $9.3 billion. Shares in the live streaming and e-commerce company GD Culture Group fell 28% on Tuesday after announcing a share deal to acquire all the assets from Palace Capital Holding, including 7,500 Bitcoin. GD Culture will issue nearly 39.2 million shares of its common stock in exchange for all Palace Capital's assets, including $875.4 million worth of Bitcoin. The company uses artificial intelligence to create fake people and run a live streaming and e-commerce business via TikTok. Its acquisition would make it the 14th largest publicly listed Bitcoin holder, joining a trend of firms that are buying up cryptocurrency. Bitwise filed with the US Securities and Exchange Commission to launch the Stablecoin and Tokenization ETF, an exchange-traded fund designed to track an index split between companies tied to stablecoins and tokenization. According to a Tuesday filing, the proposed ETF will track an index featuring companies from stablecoin issuers, infrastructure providers, payment processors, exchanges, and retailers to regulated crypto exchange-traded products with exposure to Bitcoin and Ether. The index, which will go through quarterly rebalances, is split into two equally weighted sleeves, an equity sleeve and a crypto asset sleeve, each making up half of the fund. Standard Chartered's venture arm is preparing to launch a $250 million digital asset investment fund in 2026, signaling growing institutional appetite for digital assets. Standard Chartered's SC Venture plans to raise the capital to open the investment fund focused on digital assets in the financial services sector. Set to launch in 2026, the fund will be backed by Middle East investors with a focus on global investment opportunities. SC Venture's plan follows a wave of corporate treasury firms building long-term accumulation strategies, adding to expectations that more institutional inflows may enter the crypto market over the next several years. Galaxy Digital is expanding its digital asset footprint with plans to launch a tokenized money market fund. The New York-based company led by Mike Novogratz wants to give investors a crypto-friendly alternative to similar funds offered by big players like BlackRock and Franklin Templeton. The fund will roll out in the coming months and promises to operate across Ethereum, Solana, and Stellar. However, it will not launch on all chains at once. Anchorage Digital will serve as a custodian for the fund. The move highlights Galaxy's ambition to blend traditional investment structures with blockchain innovation. Swiss banks have made a big move that could change how money moves between banks. In a trial led by the Swiss Bankers Association, top banks like UBS, Postfinance, and Signum Bank completed the first ever bank payment on a public blockchain with full legal approval. The proof of concept focused on deposit tokens, which represent bank money on the blockchain. The system triggered an off-chain fiat transfer when a tokenized instruction appeared on-chain. The system used smart contracts to keep transactions safe and follows the rules while running automatically without extra steps. Circle has made its involvement in the Hyperliquid ecosystem, launching native USDC on the Hyper EVM network and announcing a strategic investment in Hype tokens. This expansion is designed to enhance liquidity, interoperability, and capital efficiency for developers and traders on the platform. Circle is now also a direct stakeholder in the Hyperliquid ecosystem. The core of this collaboration is the integration of native USDC and Circle's cross-chain transfer protocol on Hyper EVM. This will allow users to move their digital dollars seamlessly across various blockchains without relying on third-party systems, which often introduce friction and potential risk. The UK and the US are set to announce a new agreement on digital assets with the goal of adopting closer regulatory alignment and boosting investment. The move, which comes amid President Donald Trump's state visit to the UK, is seen as a direct response to growing concerns that British companies are falling behind their US counterparts in the digital asset space. On the other side of the Atlantic, business wants higher valuations. Because of this, they are shifting their listing from the London Stock Exchange to the New York Stock Exchange and Nasdaq. This has caused a lot of political stress, which has now been followed by a push. The new agreement is expected to specifically address stablecoin cryptocurrencies pegged to traditional currencies. The UK and US are reportedly working on developing digital security sandboxes. These would allow companies to test blockchain-based financial services in a controlled environment. Google released the Agent Payments Protocol, an open-source standard that was made with help from more than 60 companies such as the Ethereum Foundation, Coinbase, Mastercard, and PayPal. The protocol, launched on September 16, 2025, aims to make it safe for artificial intelligence agents to handle financial deals for users, giving the growing field of agent-led commerce a standard way to work. The project addresses a major gap in current payment systems, which are designed to work only when a person is present to approve deals. AP2 adds a way for AI agents to safely verify payment requests and show that the user is authorized. Well, that's all in this bulletin for now. This is Mirchi Sharma signing off. Keep watching 3.TV.